Political risk is adding a premium to the euro-pound trade before either side has clear policy certainty. EUR GBP frames the pressure because the pair is not moving only on rates. It is also carrying uncertainty from Eurozone coalitions and UK election speculation. The supplied data points to an increase of about 15 basis points in risk premium and wider bid-ask spreads. The useful part is the test in front of the story, not a broad market slogan. Range behavior between 0.85 and 0.88 will show whether the premium is expanding. That gives the opening a measurable checkpoint and keeps the story tied to named levels, named participants, named rules, or named product steps. The confirmed baseline is the risk pricing shift. The euro faces pressure from political fragmentation, while sterling faces uncertainty from UK political timing and lingering Brexit issues. The same evidence describes the recent pair range around 0.855 to 0.875 and points to lower liquidity through wider spreads. This baseline matters because it gives viewers the part that can be checked before any larger conclusion is drawn. It also limits the story to the facts already visible. The pressure is cross-sided, not a one-currency story. The viewer can separate the setup from speculation. One side is the factual baseline, and the other is the result that still needs confirmation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is political risk being converted into transaction cost and currency premium. In plain English, when outcomes are harder to predict, traders demand compensation and quote wider prices. For EUR GBP, that mechanism matters because the pair can move even without a major data surprise if political clarity worsens on one side. The stress point is specific, whether investors keep hedging exposure or decide the premium is already priced in. This is the part that makes the headline useful, because it explains why one level, deadline, filing, reserve figure, integration, or data point can change behavior. The direct impact lands on FX traders, importers, exporters, and treasurers with euro-pound exposure. The immediate effect is higher hedging attention and less tolerance for tight stop levels. For companies, a wider spread can raise the cost of moving cash between currencies. The practical consequence is political timing becomes a market variable, not background noise. That is the viewer value here, understanding who faces the change and why the change is not the same for every participant. The effect is not evenly distributed, so the segment focuses on the group with the clearest supported exposure. The unresolved part is which political risk dominates the next repricing. A higher premium does not prove a lasting trend in either currency. That gap matters because the pair needs a clearer policy signal before the market can choose a side. The cleaner proof would be a break out of the projected 0.85 to 0.88 range or a narrowing in spreads. Until that appears, the story should be read as a defined setup with a real open question. That does not make the story smaller. It makes it cleaner, because the unresolved detail is exactly where risk can be misread. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The concrete signal to follow is election timing, coalition developments, and central bank communication. Those inputs can change how much premium traders demand for holding the pair. EUR GBP becomes easier to read if spreads keep widening and the pair breaks its expected range. It weakens if political noise fades and liquidity normalizes. The final readout is simple. The risk premium is the trade's hidden cost. A strong next signal should be observable, not emotional. A filing, close, data release, official term, usage number, or liquidity change.